Good afternoon. Welcome to OptionsTender. It's Tuesday, June 17, 2025. We're going to zoom through this really quick. I think the market is just kind of marking time, marching in place here, waiting for information. FOMC is tomorrow. Do I think anything occurs? I do. What the catalyst is, I don't care. It's FOMC. There's going to be some sort of meeting. Maybe the market goes volatile to the upside, downside, and then, in my opinion, resolves much lower. But we'll have to see what price action gives us. It's a pretty crazy ride during FOMC. Sometimes it goes up and down just to go nowhere for the day, and you have to wait for, in this case, Friday, because Thursday there's no trading. But we'll see. I've seen it. I've seen everything. So, I've seen gaps up and then crap. I've seen, or not gap, I have with CPI, but for FOMC, just depending on the catalyst, obviously it's at 2 p.m. Eastern Standard Time. So we could see a nice sharp move up here and then a big wick to drop us 300 points in one day. I've seen it. Believe me, it can happen. But I've also seen where there's wicks to the upside, wicks to the downside, and you end up nowhere. Okay? So nobody knows what's going to happen. We have to follow price, not get whipped out, not try to trade intraday with it. You do what you want. That's your style of trading. But I'm going to wait for the follow through on it, and I'm already in my positions, and I'll add on to positions appropriately. Okay, so let's zoom through here. We're doing this intraday about 11:56 a.m. Eastern Standard Time, and if you want to get these videos intraday, consider supporting the channel with the YouTube membership for 99 cents a month. That gets you the Discord and trade alerts. And there's a $4.99 one as well for individual stocks. We did Tesla to follow through with our trade. I like to, this is a learning educational platform. So I like to go through those trades. And first of all, why I choose the trade, what the setup is, and then we'll follow through to, to the next day or so to update those trades, so we can learn off of them. I don't do every single trade, but I try to do as many that time permits. And you'll see the beginning to the end of, for example, Tesla. If I choose to do that update, then we'll do the full follow through. We'll show you the setup, and then we'll update and try to manage our trade. Okay, and then we'll. After the closeout, we'll show, why we closed out, when, where, and the reasons for it. Okay, but usually I give you that sense of where that target, where we're going to close out in the beginning. Sometimes it's a little earlier than we expect. It all depends on time. We're trading options, so we have expirations and things like that. So, all right, enough babbling on. We have SPX on the daily time frame. Inside, we're creating this equilibrium. Is this consolidation for higher, or is this a distribution for lower? I think it's distribution. We have our moving averages. We're just sitting on top of that 8 EMA right now. Calling oscillator. Again, such an awesome indicator. We have all these negative divergences. Once those start to play out, it can get nasty. Here is another example. We just had a great example where you had negative divergence, and then once you crossed again down to the bear side like we are now, then things get ugly and you get oversold. You had just it's minuscule bounce here, that consolidation for a bear flag, which brought us back into bull territory. All right, and then we got a much faster lower drop here. It's not always going to look the same. Many examples. And then check out the weekly analysis. I saw a comment on, is anybody looking at the MACD? Yeah, there's a bullish MACD crossover. Okay, we're in bear territory though. So look at the weekly analysis, and we have the McClellan summation index on there too, which has a great channel on it. it's the accumulation of these daily data from the I'm calling oscillator. So check that out. Really good point of view from the big picture. MACD is curling over. All right, now it's having a hard time curling over because you have the bullish crossover on the weekly time frame, right? So this is going sideways, but it's starting to accelerate. You see the histogram there. We have the negative divergences. Those are going to play out. And we have some tailwinds to the downside on the slow stochastic. Okay, this is going to take some time for this to happen. If you want that weekly to curl over, you're going to have to see this, push to the downside. And then when we get that bearish crossover, if we get it, then things will start to accelerate to the downside. Here's the DMARC. We had our 9 count. Nothing to see here. 1, 2, 3 so far. Awesome oscillator still heading lower. Let's go to SPY. I'm constantly showing where the targets and things like that are. We go on a storyline each week. So Friday, check out that video. Give targets on Sunday. We gave on the weekly analysis the targets to the downside. Here's our money flow index. Money is flowing out so far. Negative divergence. No volume to look at here. Bollinger Band getting tight. Starting to go sideways to maybe expanding a little bit. We'll see what happens. We already had our sell signal back here though, and we haven't made new highs since. Again, we'll see what happens. Heading down, wave 3 into wave 5. Let's go to the 65. Well, again, VIX. If we just look at the VIX on the daily and the SPY on the daily, we should be fine with our analysis, and we should end it there. But we're trying to learn these indicators, and the whole point of doing this each and every day, show these indicators. How do you can have another trader interpret them a totally different way. So this is how I look at it from my point of view. Here's our trend line from Jeff from our Discord. My trend line was a little bit higher. We ended up breaking down lower than that. His added up perfectly from this low to this low to this low. This is a basing area, and we're above that basing area. 19 has been proven as a very, very important zone. Okay, we're above it. We back tested it. We held on to that support. We're in a bullish state. I know that we're inside this trading range, but we're also in a cycle, a rising cycle phase on the weekly and on the monthly. Okay, so there you go. Let's see where it goes from here. SPY 65. Bearish rising wedge broke down. Bearish rising wedge a little bit less steep. Broke down. Back tested. What happens now? That's what we're waiting on. We close this gap to the upside. Gap below, and many gaps below. I think all those get closed. Moving averages, kind of fighting, really just catching up, and maybe we end up going sideways there. MACD, basically sideways, just like on the daily time frame. We made our last divergence right here. We made a new high in price, but made a lower high on the MACD. So let's keep an eye on this. Again, if we make a high here, it's just another back test, and we'll have another divergence. So same thing here. We had a positive divergence here on the last move down. So that's what gave us our bounce for the back test. And let's see how we resolve. So slow stoke looks like it wants to curl back to the upside. We'll check this out again tomorrow. DMARC 1, 2, 3, 4, 5 right here. Nothing to show. Awesome oscillator, just about neutral, heading, whipping back and forth. I whip my hair back and forth. Money flow index. We had the negative divergence, money starting to flow, distribution in my opinion. even if we make a new high here, we're going to have another divergent high. Bollinger Band, right in the center of it. That's neutral. The oscillator, again, showed wave 3 into 5. So if this is a wave, the end of another wave 3, if that was extended, I have a 1, 2, 3, 4, and 5, and we're done. And I think the 3 from the top here going to the 5 there proves that. Yeah, that's what this is showing to me. But if we do make another high here, it'll probably be another divergent high, really low there. And this would still be considered a 3 into 5 because you have your wave 4 and then a 1, 2, 3, 4, 5 into there. There's different ways to count, like I said. And then you have another wave 5 up in there. So 1, 2, 3, 4, and 5 rather than 1, 2, 3, 4, 5. Okay, so that's how we have to look. It's it's all putting the puzzle pieces together. We have a possible 1, 2, 3, 4, 5 wave leading diagonal with a deep retracement here for a back test. So this move can be done. Okay, giving a quick glance. Again, this is our situation, whether we make a high here or another high, whatever, a few points above. And I'll move this over. Either way, we're looking for this to be done, and we get our initial wave 1 down, our impulse wave, and then a wave 2. Now, what we were talking about in the members video was this will be very telling. What kind of move we get here is the one, does it break this low? Does it close the gap? A larger move to the downside, closing the gap will be a little bit more of a bearish scenario where its probability is that we get a bounce and then we head lower. But if we don't break this low, then it leaves open the ability to go straight to all-time highs. Even though I do think that it's still probably a 1 into a 2. And then lower. But again, price action is going to have to prove itself. So here's the bullish scenario. That bullish scenario, we're looking at a leading diagonal. Again, it doesn't matter if this is the top here or if we make just a brand new little high right here. All right. Either way, we're looking for a correction. And this low, if you're bullish, you want it to hold here. Then you have a 1, 2, and you get a wave 3, 4, and 5 to all-time highs. And in my opinion, that will be the end of the entire move, the last move, and then the bear market happens after that. Okay, but there is another situation. If we break these lows, that this is just a wave 4 coming in here. How does that happen? Well, if you have the 1, 2 in here in yellow, and I have a 1, 2, 3, 4, 5 here for a 1, 2, and then if this is wave 3, we're looking for wave 4 into this zone. You have the 23.6 and a 382. What negates that? Breaking down from the 382. So that's why this is important for this gap to close and see what happens after that. I doubt it'll go straight through the gap. Gaps protect basically bearish scenarios from playing out extreme. But in a week like this with options expiration, you just got to be careful. This thing could just grind and not stop. Right? Is that probable? Probably not. But I mean, you just have to be ready for it. So that's why we give the scenarios. So is this a 1, 2, 3, 4, and then 5 for all-time highs? That's your other situation. All right. So I'll leave it like this for the bulls. A 1, 2, 3, 4, 5 higher for all-time highs, or a 1, 2, 3, then wave 4 getting here. You see it ABC. and then a wave 5 to get us all-time highs. All right, 2 different ways. All right, that's it, you guys. I guess we could look at the VIX and 65, but that's pretty much it. I appreciate all your support here. We're looking at this. I moved this left shoulder over here. It doesn't really matter where you put it. I'm looking at this as being the neckline, okay? And we rejected off of it the first time, and I could adjust it too. That's, you know, you guys want to see these tops hold on there. So we're messing with the neckline here. Even if we come down here and price goes a little bit higher, we close the gap. We're forming a right shoulder here. So the setup, left shoulder head, right shoulder, and then we break out. So let's see what happens tomorrow. Again, things could go crazy. This could drop down to here, close the gap, and by Friday, this be gapping up higher, and then the market is heading much lower. I think the risk reward to the downside is amazing at this point. So I don't care if we do make a new little high into tomorrow with a wick or whatever happens. It doesn't matter to me. I will constantly push this risk reward. We're looking really good, a really good setup, and it's going to be very lucrative. So, and at that point, I do think the trend is turning for much lower prices. Okay, thanks for joining us here at OptionsTender. Have a wonderful day. Don't forget to like and subscribe, and we'll see you tomorrow.